Hello everyone. Um, Today is our second last class for this semester. And as scheduled, we're going to review the whole class content because we have already reviewed for test 1 and test 2. So I'll just briefly go over those chapters we have already covered in the tests and linger more on the chapter 6 and 7, which we have just finished. And one thing to be clear is that in the final exam, it's going to cover all the chapters we have covered in the class, not just the chapter 6 and 7. Okay, so pay attention to this class, and basically I'll just point out what is the most important concepts or problems you need to review or practice on. And of course, all the other contents are also helpful for you to understand the key concepts. But if you want to just save some time in this busy week, you at least need to pay attention or work more on these slides or the problems which I will point out in this class. And if we have anything left in this class, we will cover that in the next class. And also we will review the homework number 4's answers in the next class as well. And of course, if you have anything confused to you, and if you have other questions that I have not answered or described or solved clearly in the class, you can just send me an email during the weekend and to let me know like which lecture, which slide, which problem you have problem with, and then I will try to cover that in the next class if we have time. Okay, so the final exam, it's a comprehensive final exam, so it will cover all the contents, and usually the problems, it will be a comprehensive problem, which means it covers multiple concepts or techniques in one problem. And also the exam date is November 30th from 12 a.m. to 12 p.m. The 24 hours window is available so that no matter where you are, you can have a good time in your location to finish the exam. And you can take the exam anytime within the 24 hours window on that day. And once you start to take the exam, you have 150 minutes to finish and submit it. And of course, you only have one chance to submit the answer. And if you are qualified for extended test time, the time will be extended by me in advance, following the guidance from the related university office. So I have already done that. So in the exam, you will automatically have your time extended if it's a case. And you can use the class slides, both printed or digital versions, textbook, both printed or digital versions, notes, scratch paper, and handheld calculators during the test. One thing about the digital versions, okay, of the class material, I just want to remind you that I don't prefer you to use digital versions if you can manage to use the printed versions. Why? Because I'm not sure in Examity how they can distinguish if you are checking the other tab for the textbook and the slides, or if you're switch between tabs for online chatting or other resources which are not allowed. This is something I am not sure, okay? And but of course I will, and I have already had these rules described, provided in the examity. Okay, so in the examity, in the setup section, there is like specific rules where the instructor can input things like this. And so I have already copied this whole content in that rules about the digital version, textbook, and the slides. But I'm still not sure if the system of examity will read through this and automatically allow their system to distinguish the normal behavior and suspicious behavior. That's why I don't recommend I don't recommend digital versions. But if in case you have no other choices, then you might want to be aware of this risk, okay? Which means you might be flagged out, and then in the end you might need to talk to the examiner or talk to the university about why you are flagged and why these rules are not recognized by examiner. So maybe there are a lot of hassle waiting there. So you'd better use the printed versions. So this is one thing I want to speak about in advance, okay? And the grades. So if you are checking your Canvas grades, the final grade, please don't refer to that as your final grade, and don't use that to calculate how many points you need from the final exam, because that final grade is not the grade you're gonna get. Okay, it's just Canvas internal grade system, which is not the final grade you're gonna get, and you only can use that final grade until your final exam is graded. So please don't count on the current final grade in your Canvas system. Okay, I know some students, they use that grade as a reference, and then they kind of calculated like how many points they want to have or they need from the final exam. So they skip questions in the final exam just because they thought they can just make up from just that many points from the final exam will be enough to have a certain grade, A or B or C, whatever. But I have to remind you, please don't do this. You need to try as hard as you can and do as many questions as you can in the final exam. And please do not refer to the current final grade in the Canvas system. And okay, so now let's get started. So in chapter 1, we learned what is engineering economy, okay? And that's very basic. And we might have some multiple choice problems for these concepts and the principles. And in chapter 2, we learned the cost concepts and design economics. We learned different types of costs. You'd better go over all these concepts and try to understand what's the difference between these, paired costs concepts like fixed, variable, and marginal, average, okay, and sunk cost, opportunity costs, and recurring costs, non-recurring costs. Those paired cost concepts, they are paired because they are they can be confusing. Okay, so you need to go over all of these concepts and think about some examples we have mentioned in the class. Okay, and then we learned some terms like goods and service, consumers and producers, utility, value, perfect competition, monopoly, especially the concept of price, demand, revenue, cost, and profit, especially the difference between revenue and profit. Okay, let me just try to use another color. Okay, revenue and profit, they can be confusing. Okay, so try to distinguish these two very well. And so here are the concepts explained. I won't go over all of them. Okay, and then we talked about the total cost, the equations, how do you calculate total cost, and what's the relationship between the price and demand. Okay, and also this problem, which covers everything, every equation in this slide. So you want to go over these equations, or you can call it formulas, to see how to use that, and then also go back to this problem to see if you can use all the equations correctly. Especially you want to work on this d prime equation, because that can be hard to calculate just because of the complicated equation itself. Okay, you need to know the right order to do the operations. Chapter 3, we learned some techniques to estimate costs, and we know that there are two fundamental techniques. One is top down, one is bottom up, and also we know there are some a list of categories that might be used to classify various costs and revenues. Okay, because we're talking about costs in this chapter, so you want to know what type of costs you're looking at. And estimating techniques, we have learned indexing method, power sizing, learning curve, and regression. And these three are, and also the unit method and factor method are the methods where we require in the class. And so here are the formulas for each method, and also one example for each method. So you want to make sure you want to make sure let me see if it works. Okay, you want to make sure you can use these techniques to solve those problems. Okay, so these are just the techniques we have learned. Okay, and then here comes the chapter 4, which is very important because it tells you how to calculate the interest. And the interest is the exact reason why we have this class, why we talk about converting money from one time point to another time point, why we couldn't just compare the present worth to a future worth, because that's all because of the interest. Okay, so interest, we have the concept of the interest. That's the fee that a borrower agrees to pay for the use of your money. And we have interest rate, which is a percentage of the money borrowed that must be paid back in addition to the original principal. Okay, and we also learned there are two types of interests, simple, compound, and they have different calculations. Okay, and cash flow diagrams, these rules, how do you draw it? Can you find out the right diagram for a specific problem? Okay, and the difference between different perspectives. Okay, that's the thing you want to know. And And then here comes the 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 factor method, okay, which is the core of this class, because we use the factor method a lot to convert the money at some point to another sometime point, okay. And what we can do with this factor method is we can find the future value when given the present value, interest rate, and the number of periods, okay. And then focus on the factor method here. And of course, we can find the present value when given the future value. Also, you just need to use the factor method. We don't require you to use the equation method. And of course, you can find the F given annuities, or find the present worth given annuities, or you can find annuities given a future value, or find annuities given a present value. Just use the factor method, okay. And also, of course, you want to know how to find out the right factor in the table, and go through these problems, see if you can use the right factor, okay. And of course, you want to practice about if you are given a problem, like I want you to to find f given p. Can you write out this factor correctly? Okay, try to fill out these blanks. And also, we learned the deferred annuity problem. This is the formula we learned, but the thing is, you need to find out what is N, what is J, okay, in the deferred annuity problem, so that you can convert, or you can use this equation directly to convert deferred annuities back to the present time. And then we talked about multiple cash flow problems, because before this there are only one type of cash flow you need to convert, but right now you might need to convert multiple cash flows, okay. And here are the steps to convert multiple cash flows, and here is one complicated example of doing that, okay. Try to figure out this example very well. Okay, I'm sorry if you hear some baby voice, that's my newborn, okay. And today I have to take care of her by myself, so please forgive me if you hear some noise from her. Okay. Okay, so here are some typical problems you will see, and be sure that you know how to solve those problems, like to find f given p, what factor to use, and what it means to convert present value to future value, okay. And here is one thing I want to mention. Sometimes if we convert the present value to the future value, we call it compound. So we're compounding the money. So the exact amount of that money will be increased, okay. But if we're talking about to convert a future value to present value, we refer it as discount. Discount means the exact value. I mean, it's not value. Exact amount of that money will be decreased from the future time to present time. Okay. So you might see these two words in the problem statement. So don't get confused. If we talk about discount, which means you're converting a future present to a present, a future value to a present value. Okay. And we also learned the uniform gradient cash flows, and so you want to just go over this to know like what it means, and then how to use these factors. Okay. And nominal annual interest rates, this is very important. You want to distinguish like nominal annual interest rate per period, effective annual interest rate, these concepts, and try to go over these examples, right, to practice that. And also this type of practices, very helpful. And also you want to know how to use this equation to calculate the effective annual interest rate out of the nominal interest rate. Okay. And chapter 5, evaluating a single project. Okay, so basically you just need to use the present worth method, the future worth method, annual worth method, or the IRR ERR method to see if a project is a sound one or a bad one. Okay, so usually we use present worth method because all the other methods will give you the same answer. So present worth method, you can just check if the present worth of all the cash flows is bigger or equal to 0. If yes, then that project is a sound one. If not, you want to reject that project. And also the interest rate you use is called MARR. Okay. So go over these examples, especially the ones for the present worth method. And then we learned the bound value. So here are many terms we use for the bound value. And then the equation. The equation is telling you like how much price you want to pay for that bond if you have a personal yield interest rate. Okay. And practice on this to see if you can find the N, the R, the I, the Z, and C correctly from the statement. And we also learned the capitalized worth method to work on some long-term project. And also the future worth method, the concept is the same as the present worth method. Okay, and annual worth method. Okay, and then chapter 6, to compare multiple alternatives. So first we know that there are two types of decisions you're facing. One is called investment alternatives. That is this type of problem means that you might have positive cash flows and negative cash flows in your diagram, and in the end all the present worth or future worth or annuities to compare, they're all positive. So the one which is the best will be the one project that has the greatest present worth or future worth or annuity. Okay, so that is one type of problem. And another type is called cost alternatives, which means all the cash flows you have in your diagrams, they're all negative cash flows. So basically you're spending money all the time. And one exception is that maybe at the end you have a salvage value for trading or selling that equipment or project to someone else. That's the only positive cash flow you have. But typically, the present worth of this type of cash flows, they will have a negative values to compare. And so, if they're all negative present worth, you want to just choose the least negative one. That is the best project. Okay. And of course, if you want to compare projects, you have some rules. Okay. The rules are useful life of a project and the study period. So you want to keep everything in the same timeline. If you want to compare two projects, they must have the same study period. Okay. And if they have longer useful life or shorter useful life, you need to use different techniques to extend one or to truncate one. Okay. And we also learned the repeatability assumption, which means the economic estimates for an alternative's initial useful life cycle will be repeated in all subsequent replacement cycles. Okay, so and here is different scenarios you will face. The first scenario is very easy. Your study period equals to the useful life of your two alternatives. So what you do is you just need to compare directly. You wanna use this 2 year as their study period. And the second scenario is that your study period is different for different alternatives, and their useful life are different as well. So what do you do? Okay, so um, the fundamental principle is you always want to compare the alternatives over the same period of time. So for the first scenario, you just go compare them directly using present worth or annual worth or a future worth method to compare which one gives you the bigger value. And here is the example. The second scenario is whenever you have different useful lives for your alternatives. And for example, these two pavers, one have a useful life for 3 years, the other have useful life for 6 years. So there you need to determine what study period is a good one for the comparison, right? And so how do you find out the good study period for this type of comparison? You want to try find out the least common multiple of 3 and 6. Okay, so the least common multiple of 3 and 6 is 6, which means if you want to compare, you need to use 6 year as your study period. And you want to extend the 3 year life paver the paver's cash flow diagrams for another 3 years to make it like 6 year in total. And because of the repeatability assumption, the spendings, the savings, the cash flows in the 3 years will be the same, exactly the same for the extended 3 years. Okay, so this is how you do that. You just extend the 3 year life cycle by another 3 year. But of course, you need to know how to find out the least common multiple. Okay, and here is one example. And of course, sometimes you have useful life bigger than a study period, which means your study period is already determined by someone else in the problem statement. Okay, so you're not going to find a good study period, but you have to truncate or extend your project lifetime to match that study period. So the most common technique is to truncate the useful life at the end of the study period, because your useful life is longer than the study period, so you need to truncate it The way you truncate it is you can assume that you sell that project at the end of that study period, and you put that selling price as you are receiving at the end of the study period. Okay, and sometimes you have a useful life smaller than the study period, and then you need to extend the lifetime. Okay, so you have different ways. The first way is to imagine that you have a contract service or lease equipment for the remainder of the study period, and or you can repeat the course of action for a part of the useful life and truncate at the end of the study period. Okay, say for a 4-year project, you extend it for another 4 year, which means you have 8 years. But if your study period is 6 years, you can just truncate that at the 6th year and assume that you sell that project at the end of the 6th year. But you want to include that selling price as you are receiving at the end of the 6th year. That's what it means. And the third method is called the reinvestment method, which means you can assume that you at the end of the study period you just reinvest all the cash flows in the previous time points to another project which has the same MARR. Okay, and the fourth method is to replace the item with a different item for the remainder of the study period. And this example is talking about the reinvestment method. And so here I have one mistake. Okay, so someone just pointed out that why he cannot find this result correctly. So that's because I have the FW1 wrong. This is not directly a copy of this 3500 because it's a present value. What we're doing here is we are converting everything to the future at the end of the 4th year. Okay, so the FW1 should not be negative 35. Instead, it should be negative 3500 times to find the future given P and MARR and 4. Okay, so that you can convert your FW1 to the end of the 4th year. But the result is right. Okay. So you want to go over this example to see if you know how to use the reinvest method. In chapter 7, we talked about depreciation and income taxes. So what is depreciation and why business owners love depreciation? Okay, you want to understand that. And what are these basic concepts? What is cost basis? What is book value? What is how do you calculate the book value in each year? And are all things depreciable? If not, what are the things that are not depreciable? Okay, very important. And we learned the market value, salvage value, and we know the annual depreciation deduction (DK) is something very important in the future method of after tax cash flow problem. And we learned different methods to calculate the depreciation. First one is straight line method, which is very easy. This is one example that you want to rework. And we also learned the declining balance method, okay, which is a little bit complicated because the equation is complicated. But you just need to understand the concepts and use the formula directly. You will be fine. And here is one example. And also we learned the MACRS method under GDS. And here are the steps. This one actually is very easy to use, but here are something you need to pay attention to. which is the half-year convention. Okay, so the half-year convention means at the first year, you can only depreciate the half-year value, and that this situation is already reflected in this R1s. Okay, but if you dispose your property before the end of the recovery period, then you need to pay attention. You need to just use half of the normal depreciation deduction, which means you want to half the rate, okay, in that specific year, if that year is before the last year. And this example, you wanna make sure you understand that why there is a half here. Okay, and of course you want to practice on how do you find out the class and how do you find out the right R's in this table. And okay, now it's about the tax. So here are the concepts about the tax. And how do you calculate taxable income? And how do you slice your income to fill this bracket table so that you can know like how much tax you owe to the IRS? Okay, go over this example. And finally, we learned the after-tax economic analysis, which is based on the depreciation deduction. Okay, so this depreciation deduction and the tax are the things we learned from chapter 7. So these are the things that you want to consider or you want to subtract from your before tax cash flows so that you can have your real after tax cash flow. And then you're going to use your present worth method based on this new cash flows and then to determine if this is a good project or not. And this is an example about how do you fill out this table. Okay, and so I will work out this problem in detail in the next class. If you don't understand how to fill up this table, why do I do this? Because like I said, you might need to solve this problem in the final exam. So you want to make sure you know how to fill up this table. And then because we just introduced this problem briefly in the class, in the previous class, so I decided to rework this in the detail in the next class. Okay, so don't miss next class. And of course, we're gonna review the answers of homework number 4 for the next class. Okay. All right. So this is all the content for today, and then I hope that you can at least rework on the problems covered in this set of slides. Okay, and one thing about the materials you can bring to the final exam. So if you you have digital versions and then you don't want to print out all these slides or all the textbook things, of course you don't want to do that, but you still don't want to take the risk to use the digital versions. One thing you can do is you can print out at least the appendix C tables and then the equations on just several pages. Okay, and also you might just want to print out this set of slides because it covers everything. That might help. Okay, that's just one suggestion, but you make your own decision. Okay. All right, so I see you in the next class.